We can head to Beijing now, where JPMorgan's vice chairman of Chinese investment banking is standing by. Frank Gong was named the most amazing profit of 2008 by Securities Daily, and he's with us now to give us his forecast. So, Frank, I mean, some pretty impressive figures we've got here from China. Exports up almost 50% from a year earlier.
Yes, those numbers are better than expected. However, export numbers really not forward-looking numbers, they are backward-looking numbers. And those export orders was probably placed about 3, 4, 5 months ago when the European contingent is still very, very limited. So going forward, we do look for those numbers to be much more moderate. And the growth, export growth definitely is going to slow down. And this kind of growth is not sustainable. Also, it's also due to last year's very, very low base during the May-June period.
So what you're saying is that that this rebound in exports is going to be short-lived?
I think China will be still showing export growth down the months and the quarters, but it's not going to be this strong. And the euro weakness has been most significant in May, and also the euro contagion, spreading in Europe and to the rest of the global financial market, also has been recent events. How would that affect corporate behavior and consumer behavior remains to be seen. And I do think the risk of another slowdown in the global economy and even double dip have increased. So that's something, the forward-looking stuff is more important than the numbers, in May, with the orders probably placed in the first quarter and in the last quarter of 2009, when the global economy was really strong.
How vulnerable is China's economy to the sovereign debt crisis in Europe?
I think if managed well, if the contagion is going to be limited, the negative impact will be small. But it's not insignificant. Europe as a whole is the largest export market for China. And the weakness in euro alone would cause a lot of foreign currency exchange loss for Chinese exporters. So a company's profitability would be would be negatively affected even without Europe slow down further. On the other hand, China is also trying to contain the domestic bubble risk in the property sector. And if that's going to managed well, the impact on growth will also be limited. However, you cannot have exports slowing down and then the domestic demand weakness at the same time without affecting the China growth story.
So tell me, does this solid export growth, and I know you said that we're likely to see a deceleration in exports in the next few months, but nevertheless, do these figures perhaps strengthen the argument for China to allow more flexibility in the yuan by depegging it from the dollar?
Yes, I would say it will aid those arguments. China should make a move on the currency front, and the currency should be more flexible. But on the other hand, how much renminbi is really going to appreciate against the dollar, really depending on whether euro will continue to weaken against the US dollar, the greenback. Because the renminbi indeed have risen a lot against the euro, and on trade-weighted basis, renminbi already start to appreciate. What China needs is a flexible currency regime and gradually moving towards a market-based exchange rate system. The current regime is not sustainable.
Interesting stuff. Frank Gong, thank you so much for your time.